Hello and welcome to Ticker Tapes. Today, we're taking a look at the world of high growth stocks. Growth and value stocks and investing strategies have always been seen as being opposites to each other. Money managers and investors have often embraced one style over the other and have rarely, if ever, changed horses. It's like growing up in a two-team town. You support one or the other, regardless of form, and you never, ever swap your allegiance. However, some of those boundaries have begun to blur as professional investors seek to outperform low-cost ETFs and other passive market tracking investments. After all, it's hard to justify a 2% management and 20% performance fee when an asset allocator can capture the returns on the S&P 500 simply by buying and holding VOO, the Vanguard S&P 500 ETF, which charges just 0.03% per annum in management fees. Hedge fund managers who did so well in high growth stocks up until November 2021 have been licking their wounds since then, and though the rally between mid-June and mid-August repaired some of the damage, Jay Powell's comments at Jackson Hole killed off any hopes of a Fed pivot once and for all. That may go some way to explaining why hedge funds, many of whom made their names as growth investors, are buying stock in the most celebrated value investors of modern times, Warren Buffett's Berkshire Hathaway, whose B shares trade under the ticker BRKB. Warren Buffett and his long-term partner in the business, Charlie Munger, are disciples of Ben Graham, who effectively invented stock analysis and value investing as formal concepts. Buffett and Munger have managed and grown Berkshire Hathaway for more than 50 years, during which time Warren Buffett became one of the world's richest people, amassing a fortune of more than $100 billion. Along the way, he acquired the nickname of the Sage of Omaha for his uncanny ability to spot a good investment and capitalize on it. Now it seems that many hedge funds are following the old adage of, if you can't beat 'em, and they can't, then join them. The Financial Times recently published the table below, which shows that leading hedge funds have been increasing their holdings in Berkshire Hathaway during the course of 2022. This list includes the world's largest hedge fund, Bridgewater, two of the world's biggest quant funds, D.E. Shaw and Renaissance Technologies, as well as Israel Englander's Millennium Management, and many others besides. Though Berkshire Hathaway is down year to date, it has significantly outperformed both the NASDAQ 100 and S&P 500 indices and has trounced the S&P Pure Growth Index during that time frame. Over the last 3 years, Berkshire Hathaway B shares have rallied by 35.6%, impressive going for a $610 billion business. However, it's not just growth investors turning to value that's at play here, because Warren Buffett and Berkshire Hathaway's biggest holding is in Apple, which of course was, and maybe still is, the ultimate high growth stock.